Here's the headline from CNBC. We were talking about this all week. Jerome Powell just spoke in Jackson Hole. Yesterday, we were kind of comparing the fact that there was a Wyoming blockchain summit also in Wyoming just days before the Jackson Hole speech from Jerome Powell and the Fed meeting in Wyoming as well. And this happened about 2 hours ago, at 10 o'clock Eastern time this morning. We had the Jay Powell speech and the markets are rallying. They are responding to the dovish takes by Jerome Powell, which is extremely bullish for us here as Bitcoiners. Anyways, let's go to the headline. The headline is Powell indicates conditions, quote, may warrant interest rate cuts as Fed proceeds, quote, carefully. Reading the key points, Fed Chair Jerome Powell on Friday gave a tepid indication of possible interest rate cuts ahead, as he noted a high level of uncertainty that is making the job difficult for monetary policymakers. And, quote, with policy in restrictive territory, the baseline outlook and the shifting balance of risk may warrant adjusting our policy stance, he said during his annual address at Jackson Hole, Wyoming. While not addressing White House demands for rate cuts specifically, Powell did note the importance of Fed independence. So they're still beating on the Fed independence meme, but there's been a lot of pressure coming from the Trump administration. We know what the Trump administration wants. They want a weaker dollar and lower interest rates so that we can bring, we can increase the exports in the U.S., bring imports back to the U.S. And of course, lower interest rates essentially means freer money, easier money to flow. So businesses can take out more loans, which for us Bitcoiners essentially means they're going to expand the money supply. There is nothing stopping this. Anyways, there is a couple of quotes here before I kind of break down what the implications are. While Jerome noted that the labor market remains in good shape and the economy has shown resilience, he said downside dangers are rising. At the same time, he said tariffs are causing risks that inflation could rise again, a stagflation scenario that the Fed needs to avoid. With the Fed's benchmark interest rate at a full percentage point below where it was when Powell delivered his keynote a year ago, and the unemployment rate still low, conditions allow for, quote, us to proceed carefully as we consider changes to our policy stance. Quote, nonetheless, with policy in restrictive territory, the baseline outlook and the shifting balance of risk may warrant adjusting our policy stance. That was as close as he came during the speech to endorsing a rate cut that Wall Street widely believes is coming when the Federal Open Market Committee next meets September 16th through to the 17th. And we have Larry Lepard here. Dovish, and the evidence is gold's pumping, silver's responding well. Of course, Bitcoin's pumping. I think it pumped like 5K this morning. So things are working in our in our favor here. Yes, there's been a lot of talk right now. And as I said, it does feel, even though I was feeling a little bearish in the beginning of the week while we were dumping, it does feel like we are in a bear trap scenario. And if this is the case, if we get the rate cuts in September and October, guys, it's going to get an extremely bullish end of the year. Now, we have to remember what
2025.
Yeah, no, 2026, 500K 2026. But we do we do have to kind of remember what Jay Powell's stance is here. He does kind of liken himself as a Paul Volcker type. And for you guys that aren't as familiar with, Fed history, monetary history here, Paul Volcker was the 12th chairman of the Federal Reserve. And in the end of the 70s, kind of beginning of the 80s, he was head of the chair during a period of really high inflation. It was aggressive inflation. I think they were calling it, what were they calling it? The Great Inflation Era. And he was trying and doing his best to not cut rates. He actually raised rates to an incredible high of like 21.5%. So this is what Jay Powell has kind of been looking at himself at. Like what Jay Powell is doing right now, though potentially Trump is saying he's going to fire him, we all know Jay Powell is out next year. And I don't think he's really doing all of this to just vie for another position. I think what he's trying to do, or has been trying to do, is to cement his legacy. Again, he looks at himself as a Volcker type. And Paul Volcker, as much as you may not like what he did and you may not like the Fed chair or people at the Fed, he was able to minimize the inflation during a time of very high inflation in the U.S. And so Jerome Powell is kind of looking at himself as this type. You know, he is battling Trump. He does know that there is high inflation here. This is unprecedented areas that we are at right now in the 2020s. And he wants to fight the inflation because he knows if he does lower interest rates too bad, it is two indicators. One, we are potentially going into a recession, more like a Great Depression, global depression here. And two, he doesn't want to be the Fed chair that basically capitulated and inflation continues to rise. And so this has been his whole mandate for the last couple of years. He wants to fight inflation. This is why he's probably been holding these interest rates. But another interesting thing did come out of this speech that Powell said that the Fed has adopted a new framework that removes a reference to the central bank seeking inflation that averages 2% over time, and one to it making decisions on employment based on shortfalls from its maximum level. So it sounds like they are going to abandon that 2% inflation rate, which we've been kind of talking about this as Bitcoiners for a long time. Because they can't get the inflation rate under control, they're just going to normalize a higher inflation rate and be like, this is what's going to keep the economy running. And there's been a lot of speculations that it's probably going to go up to like 4%. That's probably going to be their new mandate. They can no longer hit that 2% inflation rate. So they're going towards, you know, hey, we'll just try to hit 4% inflation rate. And as we know, as Bitcoiners, the true inflation here, the true inflation rate is a lot higher than 2%. I did the numbers this morning, looking at the M2 money supply and the global M2 money supply here. And since 2020, it's expanded by 25%. It went from, I believe, I have the chart here later for you guys. It went from like 76 trillion to about 96 trillion, almost 100 trillion. That's about a 25% increase in the money supply. And when they expand the money supply, that's where the inflation comes from. So even if they're targeting a 4% inflation, that is still way lower than what the true inflation rate is, at least from our perspective as Bitcoiners. It's really probably as high, you could speculate it's as high as 25% the last 5 years. It's not that good. Anyways, you guys don't really care about the macro. I know as
what
Bitcoiners.
Are you talking about?
Well, I'm talking about from like a macro perspective or from a Bitcoiner's perspective. The whole goal of a Bitcoiner is we don't have to care about what one guy says to control the monetary policy. But the reason I've personally have kind of been drawn to the macro conversation, it's not so much that all the new influencers coming into Bitcoin are huge in macro and they're getting engagement from it. It's really since we have politics and the traditional financial system kind of embracing us, or rather landing on our front door, you have to kind of get into the mentality of these big financial advisors. And Wall Street is here. Wall Street's a part of Bitcoin now, and they look at these signals, and this is how they base their trades off of. This is why you'll see Bitcoin kind of react very closely to what's going on with the global or M2 money supply in the US. And you'll also see it when interest rates cut or interest rates are raised, you'll see Bitcoin react. Bitcoin is the most liquid market. And now that we have big capital in the market, they are trading off of these signals. This is why you'll see Bitcoin kind of slump before everything else or pump before everything else. And I think this is what we're seeing happening right now. Now, again, you're probably here just wondering, what's this going to do to the Bitcoin price? Like, that's cool story. A guy, in charge of the world's money supply, he's getting dovish here. He wants to cut interest rates. He's getting concerned. Well, the interesting correlation here is, again, forgive me, guys, I am pulling up a chart here. Forgive me. Don't throw your tomatoes yet. But so when the last time we cut rates, which was November 2024, we cut it 3 times from November into December. And you can see that when the first time we cut rates, which is, it's not really here on my chart, but it was November 16th, you see the price responded very favorably, a 70% run. Yes, it's not that much. And then we double top. But if the same thing plays out, and this is where it gets interesting, if you don't understand the connection with interest rates and what it does to the economy, how it stimulates growth, this is basically the short of it. Cheaper money means more demand for risk. So when Powell cuts rates, potentially in September, Treasury yields fall, and then bonds look less attractive. And so investors start moving to riskier assets, chasing higher returns. If the interest rates are bad on Treasury yields, which are, the safest return, safest store of value in the market, then they're not really getting any returns here. And as traders, of course, they want their returns. And of course, Bitcoin being outside of the traditional system often sees capital flowing into it when the money is cheap. We've seen this play out in the past. Every time they cut rates, Bitcoin starts pumping. And though we are kind of in a new regime of quantitative tightening, we're not in the quantitative easing. We're not in the free money, easy money era anymore, because there is a lot of things going on in the economy that they can't just have easy money, because that would raise inflation. And of course, Bitcoin as an inflation hedge, that narrative starts to strengthen. And if people are starting to see the problem with their money, with their store of values, that, hey, this inflation is getting out of control, they're going to look for alternatives, guys. And we all know Bitcoin has a 21 million hard cap. All roads lead to Bitcoin. The more they expand the money supply, the more liquidity is in the system, the more they have to find a safe place to park this. And of course, at the same time, gold has historically been kind of the one thing that people hedge, but now Bitcoin is entering the mind share of everyone. And then the second part of this is the interesting stuff. I'm pretty sure, I don't think it was Mark Moss that coined this, but he's the one I've been kind of listening to recently, and he's been coining it the Mar-a-Lago Accords. This is where the stable coins and the dollar milkshake theory, or the Bitcoin dollar theory, all comes into play. Because Trump has been very, very obviously projecting where this is going. Publicly, he's saying, hey, we want a strong dollar. We need US dollar dominance. This is how we're going to make America great. And then privately, and a lot of the legislation they've been pushing through has been based on a few different things. One, they want a weaker dollar, because weaker dollar, as I said, is easier for us to import. And of course, it brings exports back into America. And there's this push for, production to come back onshore in the US. So they want a weaker dollar. And of course, as the dollar weakens, this boosts the Bitcoin just narrative in general. Weaker dollar, people need to find something to store their value in. So rate cuts will weaken the dollar. And when Dixie falls, or the dollar index falls, Bitcoin usually rises. And so international demand will increase for Bitcoin, because it becomes cheaper in local currencies, aka their dollars are dying against Bitcoin. And then of course, as more liquidity comes into the system, guys, it's all going to flood into Bitcoin. All roads lead to Bitcoin. Bitcoin is the hardest asset, the most liquid asset. If these currencies around the world, and remember, they're all connected to the dollar, whether directly or indirectly, everything is connected to the dollar. For better or worse, this is how the world works. All global economies, all Western economies, I guess is probably better put, are all essentially pegged to the dollar. Remember the Bretton Woods Agreement, where all the countries came together and they agreed to peg their local currencies on the dollar. And so if the dollar weakens, then that's just a domino effect where all the other currencies get even weaker. And then they start playing hot potato here, or musical chairs, and they all eventually start going into the dollar. Now, the interesting part about this, again, interest rates cut in treasuries, which is what most people use to store their value. So when Powell cuts rates, it's usually bullish for Bitcoin in the medium to long term. Liquidity, goes up, dollar weakens, Bitcoin narrative as an inflation hedge starts to increase. Short term, it probably spikes volatility and potentially inflation as well. So these things are happening all at once. Now, remember what I said in the beginning about what interest rates essentially mean. It means that the returns, again, you can think of interest rates as literally the interest that people have in parking their capital into treasuries. Now, the interesting part about this, and the interesting part about the Mar-a-Lago Accords, is the idea of stablecoins being injected into the system. They want to essentially, export dollar dominance around the world using stablecoins. They're able to get stablecoins in jurisdictions that otherwise they weren't able to do with the dollar. Now, again, if the bond yields are not attractive for investors, then who's going to buy these treasuries? This is where stablecoins come into the mix. And I think, Nico, we're going to talk about Preston Pitch for stablecoins later in the show. So good little pin to put on that. But essentially, stablecoins are the biggest buyers, one of the biggest buyers in the world right now of treasuries. So all of this is working in symbiotic relationship here. They're going to cut interest rates, or potentially they're cutting interest rates. The free money or loose money, easy money's coming back into the system, or at least into our psyche. More liquidity into the system. More liquidity means inflation's going to rise. They're going to have to park their money somewhere. And of course, that is where Bitcoin comes into the play. Now, I've been ranting apparently for 15 minutes here. I do have some other charts here to kind of explain where we are right now and what happened last night. But I'm going to break it over or pass it over to Nico. Nico, did I break down what's going on with interest rates enough for you to understand how this is going to affect Bitcoin?
Yes and no. But Lynn Alden in the house, and I think her meme sums it up perfectly. In case you missed Powell's speech today, that's okay. He basically said, nothing stops this train. Okay, in all seriousness, let's break down a couple things. This is the concession. The Trump administration has put tremendous amount of pressure on the Federal Reserve. We have multiple congressmen and women calling for criminal charges against the Federal Reserve. You have Senator Cynthia Lummis openly calling for the resignation of Jerome Powell for the Fed not acting as an independent entity. All of that, I believe, was to pressure Powell to eventually lower interest rates so that Trump could push forward his agenda. That's what it was all about. That's this politics that has been playing out, and it seems like Powell has finally conceded. And markets are reflecting that. I think what they wanted to do is that they wanted to run down the clock until the midterms. But what happens if Trump, and with the redistricting going on, which we're not going to talk about on this show, but with the redistricting going on and with a booming economy, that positions the Republican Party and Trump in a very, very good light going into the midterms, right? And I think that the Federal Reserve doesn't like the current Trump administration's stance on the Fed, on Bitcoin, and most importantly, on central bank digital currencies, which is the only clear future for central banks. So if you have an openly hostile administration basically saying, hey, you know what, we don't want CBDCs because, we want Bitcoin, we want, the free market money, and your whole institution's future depends on the rollout of these CBDCs, and you had this institutional moat, this protection of this so-called neutrality, wouldn't you use that if your job depended on it? Of course you would. And I think that's what we've seen the last 6 to 8 months. I think we've seen this political maneuvering, this warfare happening behind the scenes, this tug of war between the executive branch and the Federal Reserve. And then there you go. There you have it. 2 days after a Bitcoin blockchain summit in the state of Wyoming, 2 days after you had the federal bank summit of the federal bank summits in Wyoming in the same state. Do you think it's a coincidence that those two symposiums are right next to each other and they use very similar names and the same policymakers are going to one and then the other? Do you think it's a coincidence that Trump has a speech planned 2 or 3 hours after Powell's speech? No, that's not a coincidence. They're sending you a sign. Like I said yesterday, this is digital 1776, baby. This is what is happening. And of course, this is extremely bullish for all assets. Every time the Federal Reserve prints money, it inflates the prices of assets, specifically hard assets. And the hardest assets of them all, the soundest asset of them all is, of course, Bitcoin, which is why you saw this crazy pump from $112,000. It seemed like the bull market was over. It seems like we were packing it up. Oh man, we'll be back in 4 years. And then bang, right on that news, we pumped from 112,000 all the way to 117,000. We're consolidating a little bit here at 116,334. But the point remains, you know, this was a tug of war. This was political warfare at the highest levels over the last 8 months. And I think what you saw from Powell today was a concession. That's the first thing I'll say. The second thing that I'll say is the 3% number. That's really interesting to me. Why is it interesting? Because that 2% number, where did it come from? Why does money need to lose 2% of its purchasing power in order for it to function? That's an invention of the central banks themselves. Bitcoin proves that money can function without inflation. Not only does it prove that money can function without inflation, it proves that money can function in a deflationary manner, meaning money actually could increase in purchasing power over time, and money still functions. And it proves that it's better money in the first place. So they're pulling these numbers out of nowhere, right? And I love the Jeff Booth quote, 2% is just enough so that people don't realize they're being stolen from. But they're realizing, dude, there's no effing way we're going to be able to get back to that 2% number, which a lot of people were predicting. So now they're starting to normalize that 3% inflation rate. So yeah, crazy, meeting that was had, symposium or press conference that Powell had today. I think it's a big win. And let's see if he does lower rates, because he's indicating that he's going to lower rates, but let's see if he does. And again, I think that a lot of this has to do with the tremendous amount of pressure that was put on them by the Trump administration. Opti.
Jerome Powell, if you can hear me, please cut rates. We need easy money. But on the flip side, really, if he does do that and we do see high inflation, it's even more important for everyone out there to explain this to your friends and your family, because the only way out of this is, of course, Bitcoin. Now, Nico, you did say something that kind of connected this to the other story we were covering. I think it was yesterday. No, maybe it's 2 days ago. If they are going to normalize the inflation rates, then as the meme goes, Bitcoin is for enemies. So even the people in the Fed, they're going to need to find an alternative. If they can't make any returns, if there is no store of value, then what are they saving in? If they know what is going on in the plumbing of this, they'd be dumb to save in the dollar. And this is where this story, it was 2 days ago, this story kind of starts to make another appearance here. Remember this headline: Fed Bowman suggests allowing central bank staff to own small amounts of crypto products. It's almost like they are projecting and telegraphing what they want to do. It's like, hey, we're probably going to cut rates. We're probably going to raise our inflation targets. No one wants to hold treasuries. You can't save in the dollar. Yeah, maybe we should allow people to hold Bitcoin, even if they're a part of the Fed. If they don't have any experience with this, maybe they need to hold something. They need to hold this Bitcoin thing so that they can regulate better. Now my tinfoil hat's back on. It's like, no, they know that they're going to freaking nuke the dollar. And so now they're like, yeah, we're going to actually allow our partners to hold Bitcoin. So, that's my tinfoil hat theory for today. But anyways, I do want to kind of look at just kind of not the historical, but the actual stats here. So I'm over here on CoinGlass. I've really been liking these liquidation maps. So this move here today, where were we when we started today, Nico? Could you pull up those numbers? But it pumped to almost like 117. I know we're like 116-ish.
Yeah, it was like at 117, yeah.
Okay, and so this was just a move from, $58 million being liquidated in shorts. And then over here, this is where it starts to get interesting for everyone out there. I know we don't trade here, but there is some signals in the market to kind of show us where the next kind of important numbers are, what the next important Bitcoin prices are that these traders are looking at. First one is the Bitcoin exchange liquidation map. You can see, remember last week, I believe there was $6 billion in shorts. Right now, it's barely at $1 billion in shorts, and the big wall is at 117. So if we get past what? About 119-ish, and we start running into 120, then game on. And now here is where it gets really fun. Gorbachev will break down this wall. Where are the walls here? You can see that the big wall here is at roughly 121.5. So there's 1.53K Bitcoin currently on the exchanges at 121.5. So that's probably the number to look at. If we break 125, then the next huge wall is 155. I don't know. That's starting to get me feeling a little more bullish than usual here. I know I was feeling a little bearish on the show on Monday. I kind of tapered and hedged myself and said it feels like a bear trap. I think the bear trap is confirmed now, Nico. It feels like the bear trap is confirmed. So, guys, if we break above 117 and start entering into 121,
why did you
bear
say
trap?
That? You just jinxed the F.
Nah, dude, bear trap confirmed.
Could you pull up the the bear trap chart? So that
hold on, I'm renaming this. I'm renaming this. It's no longer the bear chart. It is the Nico trap. So if we can trap Nico here, bullish, super bullish. All right, hold on. My internet's acting up a little bit over here. It's not working. But yeah, I'm pulling it up. I'm pulling it up for you guys. Here we go. 1 second. Let me get this going. Here we are. This one's the Wall Street psychology chart. I'll pull up a bear trap chart so you guys can see it a little better.
We're at the anger phase.
The anger down here. No, I think we're still in disbelief, bro. I don't think we're even in hope yet.
I think we're in disbelief. Yeah.
No, here we go. This is the good one. This is the good one.
Okay, there it is. There it is.
I'll zoom in.
Interesting. Yeah, dude. No, but it makes perfect. It is working. But it makes perfect sense, bro.
I don't know, dude. To the takeoff,
it makes perfect
little
sense, bro.
First sell off, bear trap.
We haven't had any media attention. Like retail does not give a flying F about Bitcoin right now, and that's a fact, right? So,
wait, Rock. Our boys over at Rockdom. So we just pumped the amount of inflation we are gonna get. Pretty much.
Another thing, another kind of like maybe like depressing stat. Jose Rivera in the chat, the last FUD of the week. But another kind of depressing stat is that Bitcoin has barely made all-time highs against gold, right? And it's been like 4 years. This was actually one of the arguments that Peter Schiff used when I interviewed him in Las Vegas. That was one of the things that he said. He's like, look, like, Bitcoin, Bitcoin hasn't made all-time highs against gold, and it has made all-time highs against gold, but it hasn't made significant all-time highs against gold. So I agree with you. I agree with Opti 100%. I think could you pull that up, Opti? Yeah, I want to talk about it. I want to talk about it because like we are definitely in the bear trap. We're definitely.
You want the bear trap one? Okay.
Yeah, we're definitely in the bear trap phase. Like 100%. It just doesn't make sense to be in another part of it, in my opinion. So yeah, like we haven't had media attention. We haven't had enthusiasm. We haven't had greed. Like, we've had the takeoff for sure. We've had a first sell off, I would say was the beginning of the year, right? Tao in the chat, shout out Tao. In the beginning of the year when we went from 109 to 76K, now we've just kind of been chop solidating. I felt a little bit of euphoria, a little bit here and there, but we really haven't had that pump yet. Right. So I agree with you, Opti. This might have been the bear trap. Dude,
bear trap confirmed. Actually, no, now that the bear is agreeing it's a bear trap, we're in despair.
Yeah, maybe. Anyways, guys, need liquidity without having to sell your Bitcoin? For more than 6 years now, Ledn has been the trusted choice for Bitcoin-backed lending with transparency, security, and trust at their core. I absolutely love these guys, and I personally not only have an account with them, but also a loan. And some of the key features that I love about Ledn is the fact that there are no monthly payments. You pay at the end of the term. You also have the ability to roll over the loan as well, and you can pay it back whenever you want. Essentially, what they do is that they help their clients unlock the liquidity of their BTC, allowing you to HODL while still accessing the wealth of your Bitcoin. They've been battle tested with their focus on transparency, security, and trust, allowing them to build a proven track record of client success and security, helping tens of thousands of clients harness the value of their digital assets with confidence and peace of mind. Learn more about what your BTC can do for you today. Simply Bitcoin viewers get 0.25% off their first loan by using the link in the video/podcast description. What are you waiting for? Head over to ledn.io today.